All right, so welcome everybody to our deep dive today.
Yeah.
We're going to be exploring some companies with impressive growth potential.
That's right.
And we're basing this exploration on a recent article from The Motley Fool
Okay.
by Selena Merengian, and it was published just yesterday, December 10th, 2024.
Very recent.
Yeah, so this is hot off the presses.
Right.
You know, most people are happy with the stock market's historic average of 10% annual returns.
Right.
And they stick with index funds to achieve that.
Yeah, it makes sense.
But what if you're looking for a bit more? What if you're interested in those individual stocks that could really boost your portfolio's growth?
Right.
That's what we're diving into today.
Absolutely. Yeah. We're looking beyond the standard advice and exploring some specific companies that have shown impressive performance.
Okay.
And more importantly, have a compelling story for why that growth might continue.
Exactly. So let's start with NVIDIA.
Okay.
Ticker symbol NVDA.
All right.
Now, this one has been a real standout. It's tripled in value just this past year.
Wow.
And over the last decade, it's averaged a gain of 75% annually.
Yeah.
I mean,
That's incredible.
it certainly is.
Yeah.
And I think what makes it even more interesting is that this growth isn't just based on hype.
Right.
NVIDIA is strategically positioned in a sector that's exploding right now.
Yeah.
Artificial intelligence.
Right. They're not just the gaming chip company that used to be.
Right.
They've really shifted their focus to data centers and AI.
Yeah.
Which makes sense considering the huge demand for processing power
Mm-hmm.
as AI becomes more and more integrated into everything.
Exactly. And if you look at their valuation, their forward price to earnings ratio,
Okay.
which essentially tells us how much investors are willing to pay for each dollar of expected future earnings,
Yeah.
is actually lower than their 5-year average.
Wow.
So even though the stock price has skyrocketed,
Right.
it might not be as overvalued as you might think.
That's a good point. It's like the company's potential hasn't been fully realized yet
Right.
in the eyes of some investors.
It's like they're just getting started.
Oh.
And that makes them very interesting to watch.
Absolutely.
Okay.
Let's move on to another well-known name, PayPal.
Okay.
The ticker symbol for that is PYPL.
Right?
Now, most of us use PayPal,
We do.
but they're much more than just that little button on checkout pages.
You're right. PayPal is much bigger than many people realize.
Love.
They own Venmo, Braintree, and other businesses,
Okay.
making them a major force in the world of financial technology.
Wow.
They have a staggering 426 million active accounts
Wow.
and process 25 billion transactions annually.
That is a massive network.
It is.
But I've read that their customer growth has slowed down recently.
Okay.
Does that concern you?
It's definitely something to consider,
Okay.
but they're not just sitting back and accepting it.
Right.
PayPal is actively working to boost both customer growth and profit margins.
Oh.
They've been rolling out new features like their Fastlane and Cash Pass rewards programs.
And expanding into buy now, pay later options.
So they're innovating and adapting to the changing market.
Exactly. And they've also provided some updated projections
Right.
for their future performance,
Okay,
which are
yeah.
pretty encouraging.
Okay.
Now, whether they achieve those projections remains to be seen.
Yeah.
But it's clear that they're not standing still in the face of competition. They're actively trying to find ways to reignite that growth engine.
That's good to know. Now let's talk about a company that's all about empowering entrepreneurs, Shopify.
Good.
Their ticker symbol is SHUP.
Right.
They've seen close to 50% growth just this year.
Wow.
And over the past 5 years, they've averaged over 25% annual growth.
Okay.
That's amazing consistency.
It is. And what's even more impressive is that they're not sacrificing profitability for growth.
Oh,
In their latest quarterly report,
yeah.
their revenue grew by 26%,
Wow.
and they achieved a free cash flow margin of 19%.
Okay.
This means that they're generating a healthy amount of cash from their operations, which is a great sign of a sustainable business.
So they're not just growing for the sake of growing.
Right.
They're growing and making money, which
Yeah.
is really what you want to see.
Exactly.
And they're not afraid to partner with other companies,
Wow.
even potential competitors like PayPal,
Yeah,
to expand their reach and offer more services to their merchants.
exactly. That kind of strategic thinking is what sets successful companies apart.
Okay.
Plus, their share price is looking pretty attractive right now. Their forward price to earnings ratio is quite a bit lower than their 5-year average.
So there's potential for the stock price to go up from here, especially if they can keep up this impressive performance. All right, for our final company today, let's shift gears a bit.
Okay.
We've been talking about individual stocks.
Yeah.
But what if you want to invest in a broader swath of the tech sector?
Right. That's where exchange-traded funds, or ETFs, come in.
Okay.
Think of an ETF like a basket of stocks,
Oh.
all bundled together and traded like a single stock.
Yeah. Exactly. And today we're looking at the Vanguard Information Technology ETF, ticker symbol VGT.
All right.
This ETF gives you access to over 300 tech-focused companies all in one go.
It's a great way to diversify your portfolio within the tech sector. Instead of putting all your eggs in one basket, you're spreading your risk across a large number of companies.
Right.
And you're not just investing in any companies.
Right.
Some of the top holdings in this ETF are tech giants like Microsoft, Apple, and even NVIDIA, which we talked about earlier.
It's like a one-stop shop for investing in the biggest names in tech.
It is.
And their performance speaks for itself over the past 5 years. This ETF has delivered average annual gains of 23.5%.
Wow.
But what's even more impressive is that it's been consistently growing for the past decade and a half.
That kind of consistent growth can be really appealing to investors.
Yeah.
Especially those who are looking for long-term returns.
Absolutely. But remember, even with a diversified ETF like this, it's important to remember that investing in the stock market always carries some risk.
Right. No investment is completely risk-free.
Yeah.
And it's crucial to do your own research and understand the potential ups and downs of any investment before you jump in.
Speaking of research, I think it's worth emphasizing that while we've covered some really interesting companies today, this is just a starting point.
It is.
If any of these companies pique your interest, dig deeper, explore their financials, read analyst reports, and really understand their business models and their growth strategies.
Absolutely. Don't just take our word for it.
Right.
Become an informed investor.
Exactly.
Yeah.
Now, before we move on, I want to bring up an important point that was highlighted in the article.
Okay.
Even if you decide not to pick individual stocks, you can still participate in the growth of the market with a simple low-fee S&P 500 index fund.
That's a great option for many people.
Yeah.
Especially those who prefer a more hands-off approach.
Right.
Index funds provide broad market exposure.
And can be a really solid foundation for any portfolio.
So we've covered a lot of ground here.
We have.
We've explored 4 potential growth opportunities: NVIDIA, PayPal, Shopify, and the Vanguard Information Technology ETF. And we've also talked about the importance of diversification and understanding the risks involved with any investment.
What's fascinating here is how these companies are all in different ways betting on the future.
Right.
They're not just riding the current wave of technology, they're actively shaping it, investing in innovations that they believe will drive growth for years to come.
That's a great observation.
Yeah.
It's not just about their past performance.
Right.
It's about their vision for the future.
Exactly. And that brings us to a really important question for you.
Okay.
Which of these companies or the trends they represent resonate with you?
Yeah.
Which ones do you think are poised to not just survive, but thrive in the years to come?
That's an excellent question. We've given you some food for thought.
But now it's your turn to dig deeper and see which of these companies, if any, align with your investment goals and your vision for the future.
We provided the map. Now it's your journey to explore.
Love that. And we'll be here to guide you along the way. Join us in part 2 of this deep dive, where we'll delve even further into these companies and uncover even more insights to help you make informed investment decisions.
We'll see you there.
See you there.
Bye.
Bye.
Welcome back. We just finished discussing some individual companies like NVIDIA, PayPal, and Shopify.
Right.
As well as the Vanguard Information Technology ETF, which offers a broader way to tap into the tech sector's growth. But there's more to unpack from the source material.
There is, and I'm particularly intrigued by something the article mentioned.
Okay.
The Magnificent Seven stocks.
Right.
These are some of the heavy hitters in the tech world.
Yeah.
Companies like Apple, Microsoft, Amazon, and a few others. They've been a driving force behind a huge chunk of the market's growth in recent years.
That's right. And what's interesting is that these companies, while individually powerful, also reflect some broader trends that are reshaping the world.
Okay.
For instance, the shift toward cloud computing, the growth of e-commerce, and the increasing reliance on digital services. All these trends are reflected in the success of the Magnificent Seven.
And it's not just that they're big, it's that they're constantly innovating and expanding into new areas.
Right.
Take Amazon, for example.
Okay.
They started as an online bookstore.
Yeah.
But now they're involved in everything from cloud computing with Amazon Web Services to grocery delivery with Whole Foods.
Mm-hmm.
They're constantly pushing boundaries.
Exactly. And that's a key takeaway for you as you're exploring potential growth stocks.
Okay.
Look for companies that aren't just riding the current wave,
Oh,
but are actively shaping the future.
okay.
Ask yourself, what are the big trends that are transforming the world?
Right.
And which companies are best positioned to benefit from those trends?
That's a great point. It's about identifying those underlying forces that are reshaping industries
Right.
and then finding the companies that are leading the charge.
Exactly.
It's like surfing.
Yeah,
You want to be on the wave, not under it.
exactly. And remember, you don't have to be an expert in every industry to make informed investment decisions.
Right.
Start by focusing on the trends that you understand and that you find personally compelling.
That makes a lot of sense. And the article brought up a really interesting point about index funds.
Okay.
Even Warren Buffett, arguably the most famous investor of all time,
Mm-hmm.
recommends index funds for most people.
He does.
Why do you think that is?
Well, index funds are a great way to get broad market exposure
Okay.
without having to pick individual stocks.
Yeah.
They're relatively low risk and can provide solid returns over the long term, especially if you're not comfortable with the research and potential volatility of individual stock picking.
Right.
Index funds can be a great option.
And even for those who do enjoy stock picking, index funds can form a solid foundation for a diversified portfolio.
Absolutely. It's all about finding the right balance for your own investment goals and risk tolerance.
Right. There's no one-size-fits-all approach to investing.
Right.
But I think this article and our deep dive today really highlights the importance of understanding the bigger picture and identifying the trends that are shaping the future.
Absolutely. It's about seeing the forest and the trees.
Um,
And what's exciting is that as investors, we have the opportunity to not only participate in that future,
right.
but to help shape it by investing in the companies that are leading the way.
I love that perspective. It's not just about making money.
Yeah.
It's about aligning your investments with your values and your vision for the future.
Exactly.
Okay, so we've talked about a lot of high-growth, tech-focused companies.
We have.
But I think it's important to circle back to something we mentioned earlier.
Okay.
The idea that even if you decide against picking individual stocks,
Yeah.
you can still do quite well by simply investing in a broad market index fund like the S&P 500.
That's right. An S&P 500 index fund essentially tracks the performance of 500 of the largest publicly traded companies in the United States.
Right.
It's a low-cost, relatively low-risk way to participate in the overall growth of the U.S. stock market.
And it's a reminder that you don't need to overcomplicate things to be a successful investor. Sometimes the simplest approach is the best.
Exactly. It all comes back to finding the right investment strategy that aligns with your goals, your risk tolerance, and your time horizon.
Right.
There's no right or wrong answer. It's about finding what works best for you.
That's a great point. Investing shouldn't feel like a chore or a guessing game.
Right.
It should feel like you're actively participating in building the future you want to see.
I like that. It's about empowerment and making your money work for you in a way that feels aligned with your values and aspirations.
Exactly. And sometimes that means sticking with the simplicity of an index fund. Other times it means digging deep into specific companies and trends that excite you. But either way, it's about making informed decisions and feeling confident in your choices.
Right.
So let's take a step back and think about what we've learned so far.
Okay.
We've discussed some of the factors that could drive continued growth in the stock market, explored specific companies that are positioned to benefit from those trends,
Right.
and highlighted the importance of diversification and risk management.
What's particularly interesting is that regardless of which approach you choose,
Right.
whether you're diving into individual stocks or opting for the broad exposure of an index fund,
Yeah.
the key is to stay informed and engaged.
Mm.
The world is changing rapidly,
Yeah.
and the companies that are leading the way are the ones that are constantly adapting, innovating, and finding new ways to create value.
Oh, okay.
As investors, we need to be able to recognize those companies and those trends to make smart decisions.
That's a great point. It's not just about buying and holding. It's about staying curious, asking questions, and learning as much as you can about the companies and the forces that are shaping the future.
And that brings us to an important point. We've given you some potential starting points for your research. But the real journey begins now.
Okay.
It's your turn to take the information we've discussed and dive deeper into the areas that pique your interest.
Exactly. Think about what resonated with you most. Was it NVIDIA's dominance in AI? PayPal's efforts to expand its reach in financial technology?
Right.
Shopify's focus on empowering entrepreneurs?
Yeah.
Or maybe the broader trends represented by the Magnificent Seven or the S&P 500. What sparks your curiosity? What feels aligned with your vision for the future?
Right.
These are the questions that will guide you as you continue your exploration.
And remember, investing is a marathon, not a sprint. Take your time, do your research, and don't be afraid to ask questions.
Right.
The more you learn, the more confident you'll become in your investment decisions. Now, before we wrap up this part of our deep dive,
Okay.
I want to leave you with one final thought to ponder as you embark on your own research journey.
All right. I'm all ears. What's the parting wisdom?
Think about this. Each of the companies we've discussed today, NVIDIA, PayPal, Shopify, and even those within the Vanguard Information Technology ETF, are betting on the future. They're placing bets on what they believe will be the driving forces of growth and innovation in the years to come.
That's a great way to frame it. They're not just reacting to the present. They're actively shaping the future.
Exactly. And as investors, we have the opportunity to join them on that journey.
Yeah.
We can align our investments with the trends and the companies that we believe will make a positive impact on the world.
That's a powerful thought. It's not just about financial returns.
Right.
It's about being part of something bigger.
Exactly.
Yeah.
So as you delve deeper into your research, ask yourself,
Okay.
which companies are tapping into the forces that I believe will shape the future? Which companies are creating solutions to the challenges that I care about most? And which companies am I excited to be a part of?
Those are excellent questions. And those questions lead us perfectly into the final part of our deep dive, where we'll explore some additional insights and tools that can help you make informed investment decisions based on your individual goals and values.
We'll see you there.
Welcome back to our deep dive on growth stocks. We've explored a lot of ground so far, from individual companies like NVIDIA and PayPal to broader trends in technology and the power of index funds. Now, as we wrap up our final part, I'm thinking about something you said earlier about how investing isn't just about numbers. It's about understanding the bigger picture.
Absolutely. It's about recognizing the forces that are shaping the world.
Right.
And identifying the companies that are riding the wave of change.
Right.
It's about seeing the potential, not just the present.
Exactly. And as we've discussed these companies, one thing that keeps coming up is the idea of innovation.
Right.
These companies aren't just sitting back and letting the world pass them by.
No.
They're actively pushing the boundaries of what's possible. They're investing in research and development, exploring new markets, and constantly adapting to the evolving needs of their customers.
That's a key takeaway for you as you continue your own research.
Okay.
Don't just look at what a company's doing today. Look at where they're going.
Okay.
What's their vision for the future?
Right.
What problems are they trying to solve?
Right.
Are they investing in the areas that you believe will drive growth and create value in the long term?
That's such a great point. It's about aligning your investments with your own vision for the future. If you believe in the power of artificial intelligence, for example,
Right.
you might be drawn to a company like NVIDIA.
Right.
If you're passionate about empowering entrepreneurs, Shopify might resonate with you. And if you see the potential of a more inclusive and accessible financial system, PayPal's efforts in fintech might pique your interest.
It's about finding those companies that are not only financially sound,
Right.
but also aligned with your values and aspirations. It's about making your money work for you in a way that feels both profitable and purposeful.
I love that. It's not just about building a portfolio. It's about building a future that reflects what you care about.
Right. And that brings us to another important aspect of investing risk management.
Okay.
We've touched on this throughout our deep dive,
Right.
but it's worth emphasizing again.
Okay.
No investment is completely risk-free.
Right.
Even the most promising companies can face challenges, and the market can be unpredictable.
So what are some practical steps that listeners can take to manage their risk?
Well, diversification is key.
Okay.
Don't put all your eggs in one basket.
Right.
Spread your investments across different companies,
Okay.
different sectors, and even different asset classes.
Yeah.
Index funds, which we discussed earlier,
Yeah.
can be a great way to achieve broad diversification with a single investment.
And remember, investing is a long game.
Yes.
Don't get spooked by short-term market fluctuations. Stay focused on your long-term goals and have the patience to ride out the inevitable ups and downs.
Exactly. It's like sailing a ship.
Yeah.
There will be storms along the way, but if you keep your eye on the horizon and stay the course, you'll eventually reach your destination.
Love that analogy.
Okay.
Okay, as we wrap up our final part, I want to leave our listeners with a challenge.
Right.
We've explored a lot of information today, But the real learning begins now.
Right.
It's your turn to take this information and run with it.
Absolutely. Don't just passively absorb what we've discussed.
Right.
Actively engage with it.
Right.
Do your own research, ask questions, and explore the companies and the trends that resonate with you.
That's where the real excitement lies. Investing isn't just about following someone else's advice. It's about finding your own path and making informed decisions that feel right for you.
And remember, the world of investing is constantly evolving. Stay curious, stay informed, and stay engaged.
Right.
There's always something new to learn.
Okay.
And that's what makes this journey so rewarding.
That's a great note to end on. We've explored some potential growth stocks, talked about the importance of understanding the bigger picture, and emphasized the need for both diversification and a long-term perspective. But the real journey is yours to take. So go out there, explore, learn, and make informed decisions that will help you build the future you want to see.
Happy investing.